it came below that point, sweeping all this liquidity right here. So as it swept this liquidity and have this huge impulsive move, then and after marking the string high, I just pull the trend line 2 and draw a trend line to touch. Welcome, superstars, fellow traders. I welcome you all to this channel once again. We thank God for this grateful day, and today I'm here to bring you market structure analysis. I just want to simplify it for you because there are a lot of tutorials out there. They are complicating the market structure analysis. And mind you, market structure analysis will determine your profitability if it happens that you didn't analyze the market well. Definitely you are going to place a trade that might result in loss, and when that happens, it's as a result of improper analysis of the market. So without further ado, let me show you the outline of the video so that we can proceed. Okay, so this is what we are going to cover in this video. The content: 1, we are going to look at bullish and bearish trends, what popularly known as uptrend and downtrend, what it takes for a market to be in an uptrend or for a market to be considered as a downtrend. We are going to see that. And 2, we are going to see what is swing highs and swing lows. 3, we are going to see break of structure and change of character and how important they are when it comes into trading. Then 4, we are going to see what is impulsive and corrective moves. The last one is very important. Because of that, you need to watch the video to the end, and also do not forget to subscribe because I'll be posting consistently. Is what to look out for when analyzing the market. Why do you analyze the market? You need to watch out for specific things when analyzing the market, and I'm going to teach you what you should be looking for when analyzing the market. Okay, I created this channel for a purpose. The purpose or the reason why I created this channel is to help new traders in the forex trading industry. When I started out, I don't have money for mentorship. I was relying on this YouTube video. So I was doing trying and errors, and I have lose a lot of money in the process. So when I had this consistency, as I started to see some success, I decided to document the trading and make it simply as possible for the newbies in the trading business. So it's definitely something you will not want to miss. Okay, you will not want to miss. So make sure to subscribe. So that anytime I drop a video, you'll be notified so that you can be there to watch it. So without any further waste of your time, let's get to the video. When we talk of market structure, what comes into your mind? It's simply the overall behavior of the market. Simply the overall behavior of the market. How the market is performing, how the market is behaving. Is it in a range form? Is it moving in an uptrend? What popularly known as bullish trend, or in a downtrend, also known as bearish trend? You need to identify that before. So in any analysis, the first thing you have to do is to determine the trend. So how do you determine the trend? That is where our first point came to play, which is bullish and bearish trends. I have a simple method that I use to determine the trend. Okay, so this is how I go about it. I'll pull out my horizontal line and mark out the string high. Okay, string high. Then after marking the string high, I'll just pull the trend line 2 and draw a trend line to touch the first 3 points of the market. Why the first 3 points? Or let me say point, because I never knew whether it's a bullish or bearish. So the first 3 highs or lows, you need to draw a trend line to touch them. Now when you get it like that, if the angle form between the trend line and the horizontal line you mark at the string high is above 10 degrees, then that market is regarded as trending market. Likewise, if we go to the downtrend, if you come to the downtrend and you mark out your swing low and pull out the trend line 2 to draw a trend line to touch the first 3 points, of the market, and the angle formed between the trend line and the horizontal line is greater than 10 degrees, then that market is also considered as a trend or a bullish trend. The first example I did is for bearish trend. So having it like this, now you have a simple way that you can determine the trend of the market. Now, so this brings us to our second point, which is string highs and string lows. So someone will ask, what are string highs and string lows? Basically, string highs are the highest points at which the market tends to form, at which the market transforms its movement to a bearish or a downtrend, and vice versa. So a string low is at the point at which the market turns its direction to a bullish movement. So in this case, this is the swing low here, because at this point, let me bring out my pointer. I'll use this arrow as my pointer. Okay, at this point the market created a low here and there is a high here. It created another high but fails to break the previous high. So this high here is invalid high, you can't consider it. But the market further went up and break the major high. Let me mark this high out for you. Okay, so the market came and take out this valid previous high. Okay, so in that case, the market has now changed direction. So this point here has become the string low. The same way when you are trying to find the string high, the same applies to it. So now you know how to identify the bullish and a bearish trends. You now know what is a swing high and swing lows. Now this next part is very important, which is break of structure and change of character. Now let's tackle a break of structure first. So over here you can see that we have a bearish market. It's trending downward very nicely. Okay, it's trending downward very nicely. So if you watch it very carefully, you can see that the market created a low here, then move on to create a high. Now we don't know this whether the market will continue going or will return, but the market moved downward to break this low right here. It breaks this low here. Okay, now then forms a low here. Now the market has what? Break a structure here. It then proceed to, let me copy this. It then proceed to form a lower high right here, then break this previous low. Mind you, I have never talked about this high right here. I would tell you the reason why I did not regard this as a high. Okay, so make sure to watch the video to know why that particular high was not, I didn't consider it as a high. Okay, now as the price break and form a low here, it then came back, it then retraced back to form a high. So let me copy this and indicate where it breaks the market. Okay, so in that order, okay, in this order, the market is what? In a downtrend, because the market is breaking what? A structure. But when we come to the concept of, when we come to what is a change of character, a change of character is the market completely transform its direction to the opposite side. So for instance, here this market was moving in an uptrend, which is a bullish trend, but this was the low, was the last higher low before the price breaks it, forming a lower low. So in this case, the market has what? Changed character or changed direction, which is called a change of character or a reversal. So this is the difference between them. Break of structure in the same direction as the trend is moving, but a change of character results in the reversal of the price movement. As simple as that. Okay, so on to our next point, which is impulsive and corrective moves. Before we come to that, let me then take you to how a break of structure looks in a bullish trend. We have already shows that this is a bullish trend. So a price, the market forms a swing low here. Okay, then all right, then breaks the previous high right here, making this place a low, a lower low, and breaks this one, forming a lower high right here. Okay, the market then pulls back to this, it pulls back to this level, then copy, it continues to break this previous high, then forms a high right here, then pulls back again, creating another low, because this low here is lower than this low. Okay, so it creates a higher low. Let's copy this. As it creates this low, it then went on to break this low right here. But there is a confusion here, not a confusion per se, but newbies might not know why this happened, because you cannot regard this move here as a break. Why? Because the market immediately pulls back into the range after breaking. There was no displacement. Then it then came back to hit to take off this previous higher low. Okay, it takes this previous higher low, but the reason why the market did that, we will get there in a moment. So at this point, make sure to watch the video to the end and know why this move right here happened. Okay, this move right here happened as a result of something, and you'll get there in a moment. Okay, so finally, as it creates this strong low, it then move and break this previous high. Okay, so in that order, that is how the market has been working. Continue. You see, it then pulls back, breaking, it then pulls back to here, then finally broke this high again. If I should draw it, let me move this one here to show you. This is the high. You see how it breaks it within efficiency with an impulsive move. Okay, so that is it. And now this will lead us to the concept of impulsive and corrective moves. Okay, most newbie might not know what impulsive and corrective moves are. Now, when we watch this first example here, an impulsive move always go in the direction of the trend, whilst corrective moves oppose the direction of the trends. Why this happen? Because in a market, we have two people who are in the market. We have buyers and sellers. So if you wanted to buy, you have to wait for some discount to happen before you can buy, because otherwise, if you have some, let's say $20 of money, and you went to market to buy something, and maybe the price of the item has been inflated to maybe $30. Okay, $30. With the $20 you can't buy. Okay, with the $20 you can't buy, so unless you wait for the market price to come down, that is a discount. When there is a discount that's come to the range, then your $20 can purchase you some. the $20 can purchase you the item that you want to. So impulsive move always moves in the direction of the trend, and corrective moves comes against the trend. Okay, so they are counter trend moves once the impulsive move happen in the direction of the trend. Earlier on, I told you why I didn't regard this particular high here as a high. Now, the reason is there is a low here and there is a high here. The market came to this range, failed to break this low, and what pull back. It never takes out this previous high or swing high. Then it then drops there to break the high. So this high here is invalid high. You can't consider it, but rather it's an order block. It's an order block that results in this second impulsive move. You want to know why? I will show you why. Sorry, I'll show you why. Because look at this. Sorry, let me zoom in a bit. Okay, so you see that price retraces back after touching that order block. The second wave, the second impulsive wave happened. That is why that particular high, I didn't regard it as a high. Okay, so this is it. You now know impulsive move and corrective move. So at this point, if you are finding a value in the video, please make sure to smash the like button, and also favor yourself by subscribing to this channel, whilst I have a lot of video to post here or to upload here, so that you can also come and watch and enhance and have the chance to understand and start to trade on your own. Okay, so without further waste of your time again, let's move to our last subheading, which is what to look out for in market structure analysis. Okay, the market structure analysis. Personally, when I am analyzing the market, there are these things I look out for. Sorry, did the market break any high or any swing high or low that leads to a change of character? Because that way you will know whether you have to analyze to look for a sell position or a buy positions. Then again, if the market is breaking to change its direction, did it sweep liquidity before changing its direction? In this example right here, in this bullish example, you can see equal highs here. There's a move here, there's a move here, so it's an equal high. This move came to sweep all those liquidity before finally breaking the high. This is what you need to bear in mind. So if it swept liquidity before breaking the high, there's a chance, there is almost 90% chance that the market will keep heading towards that direction. Okay, let's watch here too. Let me delete all this. Now, watch what is happening here. The market creates another block here, which is an opposing candle before this move. It came back, go. It came, go. It came, go. Before finally it came below that point, sweeping all this liquidity right here. So as it swept this liquidity and have this huge impulsive move, then there is a possibility that the market will return to a zone somewhere around this area before continue its upward movement. Okay, so these are what you should be looking out for when you are analyzing the market. Now let's come here. There is another one also here. As it comes back, it comes below this equal highs. That means it has taken out this liquidity. So whenever the liquidity is taken, the market will always move in with a huge impulsive move. This way it will definitely break the previous structure high or low, like this one here. Okay, so these are what you should be looking out for. See, it came here, it takes the liquidity off this equal lows here before surging forward with the impulsive movement. So these are what you should be looking out for. Please, if you find a value in the video, make sure to like the video. That way YouTube is gonna recommend it to other traders just like you to also watch and benefit to improve their trading journey. So do not forget to subscribe as well. Do not forget to subscribe to this channel. Okay, I have a lot of video to post here, so subscribe, so anytime I will post it, you'll be notified to watch. Okay, now this is where I'll end the video. See you in the next video. Have a nice day. Bye bye.